Where's the distress in the market right now? This has been an amazing bull run that we're in the midst of still.
It is, but if you sort of look at it, so there's a lot of stress in the market. And what I mean by that is last year the economy grew at greater than 3%. You know, today, where is it going to grow? Is it 2%? Is it 1.5%? Is it 2%? Is it 2.5%? Either way, that's going to be sort of a 20 to 30% reduction in growth. You don't have a recession, which is what everybody's focused about, but what we really have is a slowdown. And for us and what we do on the credit side, a slowdown is great. So there's a lot of different opportunities that are out there that we can take advantage of today.
All right, so let's dig down a level deeper. What sectors are you specifically interested in? Retail is something that people keep saying may experience a little more stress or distress. What do you see there?
I think you have opportunities on the retail side. I think you have opportunities definitely on the energy side. You're seeing that continue. And then you have a lot of idiosyncratic type of opportunities where specific situations that we're able to come in on, where we've been able to buy the debt. You know, you've got one situation today, I won't mention the name, but bonds are due in 2023. That's the senior debt. The unsecured debt is due in 2021. And there's like $2 billion in market cap. Those bonds are trading at 75. So I think you're going to get paid off. I think we're going to go from 75 to par in the span of sort of the next 2 years. You have a lot of that here in the US. You have a ton of that in Europe. And you have much more actually in Asia. So for us, still lots of opportunities.
You were pretty early on a relative basis to this asset class, and yet it feels like more and more people coming in. Is the supply, or is the demand rather, for this type of investment from institutional investors enough to sort of absorb all these new managers? It feels like that are going after this.
Yeah, there are. There's more and more people doing what we're doing. Look, I think that's fine. I think competition is fine. Really what it means is if we see things earlier than other people, we'll come in and start buying what we've bought and we can get out. So I actually like competition. I think we're usually ahead of the curve. So the more people there, they usually take us out, and then they're taking much more risk.
We've talked about politics before. You've always been very interested in that side of the equation as well. As we go into 2020, a lot of the rhetoric, especially from the Democratic side, which you have supported, is talking about a lot more scrutiny of Wall Street, a lot more questions about income inequality and whatnot. How much do you worry about additional scrutiny, I guess, on your business and on broader Wall Street?
Look, I think it's fine to have scrutiny. I think at times we get a little bit of a bad rap, but if you sort of look at it, the vast majority of everybody on Wall Street actually is constantly doing the right thing. I think you should absolutely have the discussions because at the end of the day, you want to talk about these things. But to be perfectly honest, I don't really think it's an issue.